The stock market sell-off continues its way down. We just broke the major trend line that was holding up the majority of the stock market rally. So is this going to trigger a meltdown? There's a lot of things happening in the stock market right now. If you're not careful in this type of environment, you can lose a lot of money very quickly. So let's calm down and let's figure out this market step by step. And so we're going to divide this video into 3 parts. Part number 1, we're going to paint a complete technical picture of what's happening not only on the S&P 500 but also on the Nasdaq. There's something very big happening on the Nasdaq 100 right now. So the tech stocks are at a turning point right now. Part number 2, we're going to address the question, is the bubble popping? And we're going to look at a specific chart to answer that question very clearly. And in part number 3, we're going to cover what trades we are currently making. What are we looking at on the charts that can trigger profitable trades to make? So without further ado, let's get right into it, into part number 1. So we were watching this major trend line that was holding up the majority of the stock market rally. In fact, we can zoom in a little bit to see what's going on. So this was the trend line. We topped right here. The markets came down, tested that trend line here. This was a buying opportunity. We made a video talking about that. This was another buying opportunity right here. These are objective trades to make. During an uptrend, you have a nice support level and you can buy and position yourself at a strong support level as long as you have a stop loss, because you need to cut your losses. So we had a stop loss right here, and with one red candle, we cut through the stop loss, and that was it. The stock market broke that trend line on the 3rd test, hit the stop loss, and now we're out of the long trade. If you're not doing this, if you're not cutting your losses, you are going to get hurt in this market. We will be able to get back into a long position when the opportunity presents itself. This is not a good opportunity to be long. You want to be long above the trend line. This is a nice place to be long. This is not a nice place to be long. So what's next? Does this break right here mean that the uptrend is over and that we're starting a meltdown move back to the March lows? We're going to go back to the daily chart and see what's happening exactly. So back on the daily chart, I'm going to put up a trend line that we were looking at for a long time on this rally. This is the trend line that we were looking at throughout this entire period right here. This helped us buy at support several times along the way, staying long throughout this uptrend and then giving us a nice sell signal right here. This was our sell signal. We had a wedge pattern with these 2 tops and 3 targets. This level that we hit after a couple days, the 3,280 point level that we just hit today, and the 3,200 point level right now. And we're making our way down to this level. This was our final target. Beyond that, it becomes a little bit more worrying. But for now, since this sell signal, we expected that the correction could go all the way till the 3,200 point level. This level coincides with the 100-day moving average right here. This is a strong support as well. And it's also a huge fib retracement. I'm going to show you what I mean. You take the fib retracements from here all the way to the top. So the entire rally right here, and you'll see this level coincides with the 61.8 retracement level. And so that is a typical level that you would retrace back to during a correction. But beyond that level, it starts to become more than just a correction. If we start breaking this very important level, that's when we're going to start being more aggressively short, and we're likely going to see a pullback down to the 3,000 point level right here. But until that's the case, it is still most likely a correction, very similar to what we had here. We came down and tested the 100-day moving average right here. Today we haven't yet tested the 100-day moving average, so we still need to see how the price reacts off this level. And we are going to be looking for buying opportunities at these levels. Just like this is an opportunity for you to like this video around now. All jokes aside, if you're enjoying this content and the more frequent updates that we're making because of the market volatility, then don't hesitate to drop a like to show some support. Thank you very much for doing that. So that's the S&P 500. Fairly simple, still in correction territory, and this is the level to watch. Okay, be careful with this kind of level. Everyone's watching this level, okay? So you're going to get traps, you're going to get bear traps, you're going to get reversals just shy of that level. They're not going to make it easy for you. So, you need to be very careful, very quick. If you're not an experienced trader, just sit back, watch, and observe what's happening in the markets. The Nasdaq is extremely important right now. So this is the bull market on the Nasdaq 100. So this is the tech ETF. It's been doing very well in this bull market. It's outperformed the S&P 500 significantly. This is what has been pulling the markets higher in this last rally. So this is a very important chart to watch. If this chart breaks, then everything goes down. So what are we watching on this chart right now is this resistance line right here, okay? We've already talked about this resistance line on the S&P 500. You can see how significant it is. It's got many reactions. There's absolutely no debating. This is a huge level to watch, and we can zoom into what's happening right now. You can see the Nasdaq broke out of this resistance, and it's currently back testing the resistance. Okay, so this in itself is extremely bullish. This is super bullish. Okay, let's see what happened during the dot-com bubble. This was the dot-com bubble, so a huge tech bubble. And you can see we had a very similar thing happen. We've already covered this. We had a resistance line going right here. Important level to watch. Then the Nasdaq broke out, back tested, and never looked back. And that's when you had the big delusion phase of the dot-com bubble right here. So going back to 2020, we need to be watching this right now. This is a turning point for the Nasdaq. If the markets break back down below that trend, that's a false breakout. That's super bearish, and we're likely going to see much lower lows very quickly. But if this is a successful backtest, and so far we have a green candle, but it's too soon to tell. But if this is a successful backtest, then we're looking at much more of this kind of price action over the next few weeks. And so that leads us to the second part of this video, is the bubble popping? So this is a chart we're closely looking at. This is a chart of the growth stocks divided by the value stocks. And what they mean by growth is companies that are expected to grow faster than average, okay? And value stocks are companies that are at a low price compared to their fundamentals. And so you can see when this ratio is elevated, it means that growth stocks are doing very well. It means that there's a lot of speculation happening in the markets. Right here, investors were prepared to pay twice as much just because they thought that their stock might continue to grow faster than average. So this was the dot-com bubble, and this is the current situation in 2020. And this is just one of the reasons why we are so bearish on the stock market long term. In terms of investing, stocks are not a good idea. They are overvalued, and there is a lot of speculation happening, very similar to what we saw during the dot-com bubble. When you are investing, you want to look for value. You do not want to look for hype, okay? You want to preserve capital by buying value. So when investing in stocks, you typically want to see the ratio between 1.2 and 0.8, okay? Around the 1 point mark. So why are we talking about this? And there is a specific reason, and that is because of this is going to tell us when the panic is actually starting. When this ratio starts to come back down, very similar to what happened here, that's when you know the bubble is popping, because the same investors that were speculating on the way up right here are going to start panicking on the way down here and selling their overvalued stocks. So we're going to zoom into what just happened with the recent correction over the past couple of weeks, exactly what this correction means right now. So this is the chart zoomed in. This was the recent correction. it's MGK divided by VTV. So this is the growth Vanguard ETF divided by the value Vanguard ETF. And you can see we have a clear trend on this chart right here. This is the trend line, and there's absolutely no arguing that we're still making higher lows and higher highs. So could this be the top? Absolutely. But for now, it's way too soon to tell, and it could still be just a correction along an uptrend. We're looking at a specific level right now, this level. If the ratio starts to crack down below the trend line and this level right here, that's very bad news. That means the growth bubble is starting to pop, and we're going to see this ratio likely come back down very quickly to this area right here, to a more reasonable historic value. Now let's move on to the third and final part of this video. What trades are we currently making? Let's go back to the S&P 500. So this is the daily chart. And so right now, as we said, we are staying away from all trades. This is a no man's land. We got stopped out. There is no rush to get back into a trade just yet. I see a lot of people in the comment section that want to be always right. That doesn't happen, okay? You have to be looking for opportunities, and they will arise. So right now, something we are looking at closely is this level right here, 3,200 point. As we said, a bear trap would be a very good buying opportunity. A brief dip below and then a break back above. So if we close below this level, the 3,280 point level, and then we pop back above it, that's a buy signal, because that makes this breakdown a false breakdown and increases the odds of getting a rally. The ideal scenario is to wait for a back test of that level and then see the price reverse off support and continue the uptrend, and that's another very bullish sign. If the price starts to break down too much below this level, that is very worrying, because this is the meltdown zone. This is where we're going to see accelerated selling down to the 3,000 point level. We're going to want to be short in this area, okay? This is where you're going to be looking for buying opportunities right there, and right here you're going to be looking for shorting opportunities. Okay, this is how we're seeing the markets. We've been right before, we've been wrong before. Don't take our word for it. Make sure to make your own research before investing. It is risky. You can lose a lot of money, especially with volatility like this. So I hope you guys enjoyed this video. If you did, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading and see you next time.